Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show. Joining us today are Chintan Vora of Finance.com, Foram Parekh of Indiabulls Ventures, and Vinit Balunchkar of Ventura Securities. On the show today, we discuss Glenmark Pharma. The US FDA has issued a complete response letter yesterday for the drug's new drug application. The stock was down yesterday and the stock is down today as well. We discuss whether the sell-off will continue on the counter. Imami's promoter sold stake in the company yesterday for the second time. They have reiterated that they have no plans to sell any more stake in the company. We discuss is the worst over for the company. Motherson Sumi is down 60% in the last 1 year. We discuss what is the concern that the street is having on this counter. And lastly, we ask our analyst one stock that they have recommended to their clients to buy in this drop that has happened. But let's start with the first counter, and that is Glenmark Pharma. No doubt the counter is trading at steep discount to its 10-year average in terms of valuation. Nothing seems to be going right, trading at a 52-week low. It's actually at a 7-year low. In fact, when the Nifty Pharma Index is down 10% YTD, Glenmark is down over 30%. So there is something that is concerning. And yesterday was one of the reasons that the Realtris complete response letter was one of the issues. But what seems to be the plaguing Glenmark? And is it time to start accumulating, or it's a complete avoid? That's something that we'll ask our guest. So Vinit, I'll start with you. A lot of reasons for Glenmark. Obviously, debt concerns, financials not working, but it's been punished almost 30% this year and trading at a 7-year low. Is this the right time to start accumulating, or will these concerns still remain on the company?
I think the concerns will remain because the company has guided for the US market which is its mainstay, to not do well. And in spite of 14-15 ANDAs being introduced, I think the pressure will continue on the top line. So that is going to impact margins and, that being your mainstay. Apart from that, the new drug launch, which is there, it has also been further pushed out in the horizon. So I think these are concerns. Valuations are cheap, but the debt is very high. So, although there has been a nominal decline in the gross debt, it's a little too uncomfortable. So given all these facts, I think we will just give it a miss, notwithstanding the fact that the valuations at 15 times look reasonable.
Just a follow-up, not on Glenmark, but what's your overall sense on the pharma sector? Is there anything that you've told your clients to stay away from the pharma sector or be selective in this space?
So generally, all the US-facing businesses are facing problems. And we have to look at domestic and the rest of the world. And in that, we like Alchem Laboratories. So we are pushing that counter.
Okay, Alchem Labs is something that is being spoken about. Foram, what's your sense? What did you tell your clients? Glenmark, obviously there must be some questions. The counter is down almost at a 7-year low. What's happening there?
Yeah, so we also do not recommend Glenmark because we have seen for its Realtris drug, there has been US FDA concerns. And this concern, for this drug, I think the company had almost done 15% of R&D, of the total sales. So it's like a huge corpus which has gone in R&D, and there we have got a, a US observation. Though they have not given any such, they have not stated any such observations, but they have not even got a go-ahead for this drug. And, they're going to have the company would have to wait for more 6 to 9 months for the clarification, and then they can bring it in the market. So we feel that one should stay away from Glenmark, and not only Glenmark, we feel the entire sector is avoid because it's too much of dependence on the US FDA issues, on the pricing issues and everything, and the fact that the US will also go in the presidential election next year. So there are going to be a lot of headwinds with regards to the pricing pressure and the US FDA observations and everything. So on account of high dependency on the US FDA thing, we would want to stay away from the sector.
Okay, stay away from the sector is what Foram is indicating. Chintan, is that something that you would agree with, or are you being selective in the pharma space, and your sense on Glenmark?
So yes, very selective on the pharma space. Reason being a lot of headwinds, both from the regulatory perspective and even the pricing perspective. Now, we understand that, because of the regulatory perspective, most businesses of these pharmaceutical companies ideally is US-based business. And probably 40 to 50% of the businesses coming in for companies like Glenmark comes from US. The FDA nod of, not going ahead with, Realtrix was another jitter. Let us understand that it is not a situation which is just come up for Glenmark. The stock is almost at 7 odd years low. So there is something really, messy with the stock that is happening. A lot of, costing, lot of pricing which is gone into R&D has not really given any price sensitivity to the entire stock. The good ray of hope that we see in Glenmark is their USP is ideal into respiratory drugs. Realtrix happens to be one of them, but yesterday they've signed another deal with Novartis Bioscience for Brazil, and they've signed a pact for 3 such drugs. Right? This will send in some kind of a price uptick for Glenmark Pharma, and also all the APIs. It's time for Glenmark Pharma to monetize on their existing APIs and see some respite coming into the stock. But all this happening will take another 6 to 8 odd months span of time. Until then, it's a wait and watch kind of a story for Glenmark Pharma. But when it comes to the entire pharma space, we can be selectively picking up stocks like Cipla, which is a consistently growth counter.
Okay, my only thing is that you spoke about the API and the selling of non-core. I think one of the big concerns that a lot of analyst reports point out is that there's no clarity. They keep on saying that we will sell. They've hived off the API business, but there's no clarity on when an investor would come in. Is that something that you would agree with?
See, I would 100% agree with it, because the talks of selling of their or rather monetizing on their APIs has been quite a long shot. It's quite a long story. But what you rightly identified, when it gets monetized is the time it will show in the books as a profitability for the organization.
Okay, that's the view that's coming in on Glenmark Pharma. Clear avoid at this point of time is something that's been spoken about. A lot of concerns, especially on the debt and the financials, as well as the slowdown in the US market. The next stock we want to talk about is pretty much was the stock of yesterday, again is the stock of today. Emami. For the second time, the promoters have diluted stake. Their stake is just above the 50% mark, which means that they are still in control. They have majority stake. But yesterday they sold 10% stake to SBI Mutual Fund was one of the buyers. We don't know who the other buyers are, but they have said that the promoters will look to reduce debt in the company. Now, what is also weighing in significantly is the promoters' interest in other businesses which probably haven't done well, and that's also weighing in on the core FMCG business. What's the view on Emami? It's managed to rebound 10%, but are the business fundamentals strong, or will corporate governance or corporate related issues weigh on the stock? Foram, what's your sense on Emami? Is it something that you believe that the worst is over? The promoters have said they will not sell anymore, but is that something that probably will outweigh, or will be weighed down by what was happening in the promoter related entities?
So, the management commentary is very positive that they are not going to have further dilution of the stake. Also, whatever money they have raised from this, they are going to repay the debt. It's a good thing. But then we feel from the entire FMCG pack, there are better stocks ahead, and the fact that the entire sector has undergone good correction, and I think most of the companies have good product in their portfolio. If you look at Emami, I don't think so. They have a very good products. The products do not have a good market share. So even if we see the volume growth, I think last quarter, though there was a consumption slowdown, but Emami reported like 3% volume growth, as against its peers even during slowdown reported 7 to 10%, 7 to 8-9% of volume growth. So I feel that I would not want to go with Emami, and I would pick Britannia or Marico over Emami from the entire FMCG pack. Also, if you look at the returns ratio, the margins and everything, peers are doing far better than what Emami has been reporting, and they have been maintaining consistency in reporting good set of numbers. So I think I would go with Britannia or Marico over Emami.
Is that something that you would agree? Are you concerned about the corporate actions that are happening with Emami?
No, I am quite bullish on the stock as of now, because if you see the Q4 results, what has happened is that it has been a lackluster performance, but it's a market oriented thing, and you can see that in the market share gains. So across categories they've gained market share, margins are pretty strong. So I think this pairing of debt to focus deleverage the promoter's balance sheet is a good sign, and stock has gone into strong hands also. So it's available at 30% discount as of yesterday. Today it would be about 27%. So I think that this is a very good stock to look at. They also made the right noises for addressing key concerns, which were weak performance of the male grooming business and international operations, which have grown well. The receivables have gone up there. So given all these things, I think this stock is available. You don't get consumer stories, strong consumer stories, at throwaway prices. So I think it's a
What's
good
your
bet
what's
to
your,
do.
what's your overall view on what's happening at the promoter level? Is that a concern? Because time and again we've seen good businesses get destroyed by what some of the promoters do in unrelated businesses or other businesses.
So I am not too worried about this business because this business is not in jeopardy. Okay, what the promoters had done is, when Imami came into the market, they had a 500 crore debt. So they made it debt free. Okay, the valuation multiple went up, and they pledged those shares. So they leveraged their shareholding in this company to fund their other businesses. So that entire impact is on the promoters level, on the promoters balance sheet. This business they have ensured that it runs well because their stake has been leveraged. Now that they are drawing down on the loans, reducing their stake is a good sign. Even if the promoter balance sheet were to collapse, I think the business will get extremely attractive valuations because people are looking for growth. And there would be a lot of people who want to come and buy their marquee brand portfolio that have built up over a long period of time. So, they have 67% gross margins, 25% net margins. I think it's a phenomenal business to have. And they've got market leadership in a lot of the products. So, I think it's a good product, and I do not see any kind of negatives for this company from this point around.
Okay, that's the view that's coming in from Vineet. Chintan, what's your sense on Imami? Which way would you look at it? Concerns or worst is over?
Okay. So, difficult to have a very straight through comment onto it. So, I'll tell you, the way we look at this particular counter, it has been laden with a lot of debt. Now, what we see is a stake sale of 10%. Still, the promoters are in control of the organization. And they've clearly identified that we are no longer going to dilute stake any furthermore from here on. So, that's one positive. Good part is that whatever with the loss-making ventures that they had, which includes the hospital business, the realty, the retail, paper, they want to ideally sell off all these particular businesses and restructure the entire debt portfolio which they have. Doing this, there is some kind of a respite which is expected into stock prices. The flip side of the counter is that though there is a lot of uptick in the rural demand, it's not really been capitalized well by Imami over last few years. They've got a very strong brands like Borolin, Zandu, even Navratna for that matter. But there is a requirement for Imami to reposition these particular brands and capture larger market share. Having said that, another 6 to 8 months again it is going to take for the entire stock sell story to come into picture, and that's where we will see a real profitability chipping into Imami. Though the counter is fairly priced, I would not call it to be a deeply discounted kind of a counter. It's fairly priced, but we really need to be waiting for another 6 odd months. So our stance at this point in time goes very neutral. We're not very bearish, but at the same time we'll take our own time to identify whether to enter into this particular counter or not.
Okay, so you got multiple views on Imami, but nevertheless the stock is trading at the day's high. It's up over 10% post the management commentary that came in, highlighting that they will reduce the funds to reduce the debt, and there will be no more dilution of the promoter entity. The stock is up almost 10% currently. The next stock we want to talk about is interesting, Motherson Sumi. That counter, no doubt, like all the auto stocks and the auto stocks, Motherson Sumi has also been down in trade. But the drop of 60% in a marquee name like Motherson Sumi does raise some concerns on what exactly is happening. No doubt it has a lot of exposure to the international markets, but I believe it's underperformed a lot of the auto and auto anch names, down 60% in the last 1 year. Chintan, what seems to be the concern with Motherson Sumi? Are you sensing anything? There's no news that has come in, but the market somehow the stock has actually collapsed. People are simply not interested, not buying. They feel there's something wrong. Are you sensing something in Motherson Sumi?
See, while I was evaluating this particular stock, what I could identify is that the volumes have dropped down drastically. So one, it's not the same trading counter like how it was some time back. Second, you rightly identified there is no news which is really going to impact this particular market. But having understood that the entire revenue portfolio, the entire income portfolio of Motherson Sumi, probably 12% is Indian market based and 88% is ideally foreign market based. So a lot of pricing pressure in the foreign market is percolating down to this particular stock. Moreover, the crisis which was due to NBFC has really led in to a crisis of identifying right kind of a fund or the spend strategies for investors, retail investors. No doubt it has impacted the entire private vehicle space, which is actually the strong forte of Madan Sumi. But there is no great news for this particular counter. Despite all this, what we see is that the valuations are really good. The return on capital employed still stands tall at approximately 20 plus odd percentage. Quarter on quarter is what we end up seeing it. But there is the only worry is that the counter has not been profitable. There is something which is dragging down the entire counter without volume being really spiking up. So very fishy about the counter, and that's the reason we ideally feel that it's only good for investors who have got this particular stock to accumulate more, but not to get into a fresh buy.
But you didn't spot any red flags or anything as when you were analyzing?
No, really at this point in time, the valuation seems to be attractive and we are not finding any red flags that we can actually raise. And so we say that do not get into a fresh buy into this particular stock, but in case if you have something, it's the right time to average it out at a point.
Okay, Foram, what's your sense? Have you spotted anything when you were researching, when you speak to your clients? Anything wrong with Motherson Sumi because it's collapsed absolutely?
Yeah, so for a very long time it's not been able to perform. Even if we look at the results, I think many good things are there in the results. Like order book is at like 1.4 lakh crore, and if you see, not many companies have such good order books and all. But I think apart from SMP, its subsidiary business, if you see, there's no growth at an EBITDA level. So that is what one concern we have found out, and I think debt is also at a good 7,000 crore on a consolidated basis. So that is the net cash debt. So that is also one of the issues that we are facing. So we have various other auto ancillary companies who do not have such huge debt, and the fact that the world global market is facing automobile slowdown, and as a result it will directly impact the auto ancillary companies in a negative way, and the fact that this company particularly is not able to grow even at an EBITDA level, barring the SMP and the greenfield projects. So I think these could be some kind of issues, because when it has a good order book but it's not able to execute and show it on its EBITDA level. So I think when the entire sector is in a slowdown, this company has some problems, and that is why people, investors would not want to take a risk and might switch to other companies or sectors.
Okay, that's the view that's coming in. Anything that you're spotting, why is this happening? A lot of people ask, but there's no reason as to.
So, it's more structural. I believe that this could be a case of some financial shenanigans going on.
Okay.
Because typically what happens is when you have a serial acquirer, the classic case of financial shenanigans, what happens is you book prior to the acquisition, the costs are booked, and post acquisition revenues are booked. So that all looks very good. And when you go on doing acquisitions, everything looks nice and hunky-dory, and they guided the market well, they grew aggressively. Now suddenly what has happened, three things have come to roost. Debt has gone up, growth has slowed down on revenue terms, so they'll be growing at about 8-9% single digit, and your ROICs have crashed. So if you're earning 6 to 7% ROIC when your weighted average cost of capital is going to be 12-13%, then you're destroying shareholder economic value. So I think these are the issues that are playing out. And they have also further stated that they will go and execute more acquisitions. So obviously they would need more debt because they do not have free cash flow. So keeping all these things in mind, I think it's a potential time bomb, and I would avoid this stock completely.
Okay, even though valuations probably have come down, it's a bit of concern.
So you are seeing an ROE of 14-15%. ROIC is single digits, as I told you. So that means your capital is not very efficiently employed. And that is a cause for grave concern.
Okay, that's the view that's coming in. Still concerns remain despite a 60% drop. Don't get into Motherson Sumi is somewhat what's been spoken about today. And the last talk we want to talk about is the markets. Markets aren't beaten down as such. It's the mid cap and small cap end of the market that is beaten down, while the Nifty does manage to continue to hold on, and that's only due to a few stocks and the weightages that they have But we asked our guest whether there was any stock that corrected or crashed significantly, and now they've started to tell their clients, okay, this is the stock that you need to accumulate, hold on for 1 year and you will make money. Vineet, on this crash, what has happened? Which are the stocks that you've told your clients to accumulate?
One marquee name that we like is L&T Finance.
Okay.
Okay, we believe that there is no stress in the real estate book. Okay, GNP levels are less than 1 in the housing part, so that's a pretty positive given the the entire imbroglio around the NBFC and the HFC space. Additionally, they are planning to in a concentrated way bring down wholesale funding, get more granular, and they've got very good NIMs. Price to book is very benign. It's about 1.3, and I think. As more people, this sector moves towards marquee names, this is one player who will sustain and be a beneficiary of a larger pie. So I think this is a good stock to buy, considering its valuations.
Okay, L&T Finance is something that Vineet speaks about. Foram, anything that you have recommended to your clients recently in this stock?
Yeah, so we like IndusInd Bank. IndusInd Bank earlier also had recommended on this platform, and we have seen good correction in the stock, and there was a major overhang of IL&FS issues, which I think even management did clarify, and it happens to be just 0.5% of the book and not more than 3,000 crore. So I think that negative is now wiped off, and secondly, the biggest positive what has come is the RBI nod for Bharat Financial merger with IndusInd Bank. I mean, it's going to give them good penetration in the rural area, and microfinance lending, what Bharat Financial is mostly into. I think that segment is growing very good in India, and penetration wise also it's very less, hence there's immense scope for microfinance industry to grow. As a result, I think IndusInd Bank, who's consolidated, numbers with Bharat Financial would come from Q1, so it would augur very good on the P&L side. Also, if we see if we look at the interim budget, government did hint towards various reforms being taken to develop the rural economy, and which we think on the union budget on July 5th it would be implemented, and that is why all the rural aided stocks, it's going to definitely benefit, and as a result IndusInd Bank would also tend to benefit out of that. So I think it's a good valuation available stock, and that is why one should definitely buy at current price.
Okay, IndusInd Bank is something that you need to watch out for, but remember 4th of July is the effective date of where the merger probably will come in, so watch out for IndusInd Bank. Chintan, which is the stocks that you have started recommending to your clients? Okay,
of late we do not go per se for the sector, but M&M looks to be very promising at this time. Yesterday there was a guideline coming in from Niti Aayog stating that there is a 2 weeks kind of a time for most of the manufacturers to get translated into EV. Now this is one of the boosters which Mahindra & Mahindra can really capitalize on, because that's where their expertise lies. That's one. Two, the cost which will go increasing because of BS6 norms and even the EV norms coming in is approximately 15% for PVs, and probably for commercial vehicle it is going to be somewhere close to 15 to 18%. Now this is where Mahindra & Mahindra again will have an edge, because they have got their own core expertise and technology to back it up. Two, their new variants, which has come into mid-segment SUVs, is really doing good of late, and this is what is going to help them capture a little more of a market share. Three, and very important, is that they are not dependent only on one particular market, because their exports have already gone up by 30% last 1 year span of time, and this is where they will have another source of revenue proceeds coming in. And last not to quote, we already have the monsoon forecast, which is going to be pretty normal this year, and that's where the demands for tractors also is going to be spiking up. So all these factors put together will give a very good respite to M&M as a counter, and it's a very good time for investors to accumulate this particular stock.
Okay, M&M is something that's been spoken about as a stock that you should accumulate. But with that, it's a wrap on today's edition of Hot Money. Let me take a moment to thank all of my guests for coming in. Chintan, Foram, Vineet, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.